All right, how we doing, everybody? It's Chase. Today we will talk about ETH. We'll look at ES. Maybe we might even look at a stock or two. I'm going to start off the video by going through just some of my recent trades. I didn't pull up all the calls on Twitter and whatnot. By now, you either trust that I'm not LARPing you, or it is what it is. But yeah, I've been a little busier lately, and just really think I want to try to get these videos down to the nitty gritty. Let me show you guys what's working right now, trading wise, and what's been working for me. Some of them were probably called, some of them maybe not. Anyway, starting from the high time frame, right? Everything I've been looking for in here was mostly shorts. Reasoning, weekly. We run the weekly liquidity. Okay. After that, you typically would expect further downside. Where does the downside potentially end? The downside potentially ends, you play shorts until either weekly support or a weekly liquidity or something of that nature. Okay, so I played like short in here, short in here. Then there was the 1760s liquidity. That was a long, although I didn't personally take it. I'll explore some of these trades and tell you why I did certain things and why I didn't. And then since we went from liquidity to liquidity, essentially, even though I still think we could get lower eventually, but since we went to liquidity, today the trade idea I had was local, because the big moves have mostly played out from this leg, okay? So let me break down, show you guys what's been working. Basically just these liquidity sweeps have been good. So it's been a downtrend, right? You come up, you sweep, you move down. All right, that's one simple trade. This was a trade that I posted for FOMC. It did not take place during FOMC. It actually occurred on the weekend, so I actually missed it because weekend price action is for weekend price action to be volatile is pretty much an anomaly. It's very rare. So this one, I don't know if there was necessarily a reason not to take the trade as much as I just wasn't expecting it. One would say maybe just leave the orders and have faith in conviction. But sometimes I do look for my trades to line up with fundamental events and whatnot. And, the confidence just lowers when the market doesn't move how you expect it to, right? I always tell you guys that. I'm always trying to tell a story with the market. I'm always trying to not just use my technical ability, but really have a feel for it, a feel. And when the feel doesn't go to plan, sometimes confidence lowers. Whether I should be adjusting in the past, I could say sometimes it's good, sometimes it's not good. So, just something, my personal development over time. Next, so this was a short. Again, I had posted this one. If you took it, awesome for you. Price is moving down, right? We're still looking for shorts. I told you, we're still looking for shorts because we had not tapped even a weekly support or a weekly liquidity. We can mark out just this low. Next would be this low, right? But for now, we'll use this one. But in here, we weren't there yet. Okay, so we swept, we started moving down. And what appears again? The same exact thing that happened in here actually appears here as well. So, I believe ICT would call these fair value gaps. You have another one here, and you also have the same type of liquidity sweep setup. Okay, so liquidity sweep here, into the gap, you get a strong rejection, you play it towards liquidity. I personally played it to the range low of the week. I believe it was like 1782. Let me see how it looked. Was it? Yeah, 1782. So I had played it to here. That was my take profit. The 1760, I thought that this was target. I was pretty confident that this was target. I would say the reason that I chose to close it at this was because it was simply, it was something in the range of, like the lows from 2 weeks ago. Okay. It wasn't this low. Sorry. It was this low, 1782 it should be. Okay, 1781 over here. But point was that this low, I was looking at this and I was like, this low is from nearly 2 weeks ago. This low could provide a significant bounce. That's what I thought, okay? Because sometimes you don't know, right? you don't know if you're going to get a significant bounce. I call it the easy entry, easy exit. I'm often looking to get in right at liquidity. Okay, that's the easy entry right there. I'm often looking to get in right at liquidity right there. Where's the easy exit? Well, the first easy exit is the first easy liquidity. Okay, right there. So, yeah, and there was a little bounce here, right? It's nothing special, right? You could hold for the larger move. But again, I find that for my personal trading strategy and how I work with the market, I don't want to sit here for an extra day or an extra week or something for 20 more points. I don't want to risk a reversal of, let's see what this entry was. I had 106 points locked in, right? So 106 points. Am I really going to risk 106 points for another 18 points, right? So risking 106 for 18 here, that doesn't make sense to me. I'm just going to lock in the trade, and I'm going to start looking for the next one. The stress is reduced. Confidence is built, right? As much as people like to, I'm not going to say clown on it, but so many people just don't talk about the psychological aspect of the game. And I have a feeling it's maybe because they're not actively doing this as much as they say. Again, maybe, I'm talking out of my ass, or maybe people, I don't know. I feel like people don't have much more discipline than I do. I'm not trying to sound pompous or whatnot, but I feel like I'm a very disciplined individual. I don't get emotional for the most part, outside of like any, like a family issue or something. So I'm pretty level-headed. So I find it hard to know why sometimes I think it's just an error. I think it's an error that someone would hold for another 20 points or 15 points when you already have 100 points locked in. With that said, the other side of the coin is that when you take a trade, you want to have a target. And these trades were all very good because there was a clear target in these lows. Okay, so that's the other side of the coin there. While there was also a clear target in this low from 2 weeks ago, which we saw a bounce from, the obvious target here, and whenever you take a trade, you want to have a target, was these lows. Okay, so it's as simple as that. Probably what's best is probably somewhere in the middle of what I do and how I quote unquote teach / think and my gut feeling. Somewhere in the middle is probably what's best, because there's been times where I've taken early closes and price has bounced. It just didn't go for all the liquidity. That has happened, and I've been, grateful or happy or whatever you want to say, or correct in closing early. And there has been times where I close early and it still goes to my original target as I expected. So again, probably somewhere in the middle is probably what's right. Moving forward, so you had this sweep trade short, you had this sweep trade short, then you had these equal lows. I had originally thought about longing the equal lows. The reason I didn't was because when I originally wanted to long the equal lows, it was around FOMC. It was around here-ish, I believe. I think this was like FOMC, somewhere in here. And we just kept building up more and more lows, and I was thinking, well, they might just run this all. So my confidence had reduced a little bit, and I didn't take the long. It's as simple as that. I had originally thought about like the 1730s. It would have played pretty perfectly. Again, should I have left it, or should I have still canceled it? That's up for debate. Obviously, if I left it, there would have been profit there. But at the same time, there has been times where I see the market consolidate longer than I expect, and it makes a stronger move than I had originally expected. And that's that one. Oh, the other thing about this one actually was that I didn't feel like I had a target. Let me take a sip of water. So I told you trades need a target, right? If you're going to take an entry, you need to have a target. And I didn't feel like there was a target here. Now, there is a way to work around this thought process, so to say. Sometimes if you're playing counter trend, right? So this is the current trend. It's been moving downwards. If you're playing counter trend and you're playing high time frame, so you see a high time frame support or high time frame liquidity, you can take an entry from high time frame support or liquidity and close that entry at a lower time frame SR. Just using my eyes in very basic fashion, something along this line would I would say, okay, so, support here, move up here, support before the breakdown. So you could take from here to here. But the problem with that is if you're uncertain as to whether this liquidity is going to hold or this liquidity is going to hold, your risk reward is going to be absolute dog shit. You obviously can't put your stop loss down here and your entries here and try to play to here, right? Because then your stop loss is 2 times or 1.5 times the size of your target. So that's mostly why I didn't take that one. Just not having an obvious clean target to work with and being skeptical about whether liquidity was going to hold or whether we were going to go deeper. Okay, and the last trade I had recently talked about was this morning. I was just talking to SZ in his comments, and I had said there was this high, there was also this high, so 2 liquidity levels. And instead of having like a gap, we have a simple support and resistance level here. Okay, I didn't get filled, unfortunately. I had my entry 1 cent above the liquidity level. Didn't fill me. It would have filled on another chart such as Binance. If you go over here, so if you were trading on Binance, you got your fill. Enjoy. It could still come up again. I'd be okay with that if it wants to shoot up again. And where's the target? I mean, this is more just a low time frame scalp for me. I'm in this, I'll go in this on half risk or third risk or whatever, because there's not really a great target here, right? I'll show you why. This liquidity is already swept, okay? If these were like 3 equal lows, I'd be interested, but they're really not. And this is a low time frame trade, so the only thing I could really think of is sort of just this demand that moved up here. So strong move upwards, demand here. If it retests, it probably provides a bounce, right? If this low is taken out before we move up into the entry, I most likely cancel the entry because then the target's gone, right? So like I told you, if the target's gone, I don't really want the entry anymore because I don't have a target. Now, if I have an entry and I still have a target, this swing low right here, this demand level right here, well, that's some confluence right there. 1 target, 2 targets, entry here, moves down, boom, good. That's a trade that I like. Okay, I think you can get 1.4, 1.3 risk reward here. It's a decent trade. But yeah, that's how I see it. So big takeaway from this video is, if you're gonna have an entry, make sure you have a target. Yeah, okay. So let's do just some. We'll do some brief analysis, whatnot. We'll see what's out there. Cleaning everything off. Weekly liquidity sweep, downtrend. You have sort of SR in here, right? We can just see obvious confluence of all the wicks, all the rejections in here. Support here. If you were to retest this area again, you probably retest it by sweeping this liquidity here. I think there's some confluence on the monthly. Yeah, look, like if you take this over and you drag this, just make it 15 or something. Look at the respect on the monthly, okay? You move down to the daily. You have this block in here. Something like that. And we remove this, we make it this for liquidity. Consolidation, down move, sweeps liquidity here. We wouldn't expect to be going back down to here. That wouldn't be good in my opinion. We sweep liquidity here. We move upwards. We take liquidity here. Okay, that's a sweep. We consolidate in here to move up more. That's support. Liquidity low here. Something like, whatever in here, right? Because this is just, like I told you guys, since we took liquidity here, the next one was like taking liquidity here. That was the 1887 short. Then we took liquidity here, the 1760 lows. So if we get chop in here or something, it's totally to be expected, because all your local liquidity runs are done. You're getting into lower time frame scalps here, in my opinion. But when this chop does eventually end, or if it ends soon, I could imagine this taking out this low, coming into here, and if there is some consolidation or built up stops in here, it could run above. It could also just be a take profit into this area right here. We have to see how that develops. But I will look for a long in the mid 1600s. Okay. It's mostly it at the moment for ETH, unfortunately. Like I said, I think the best moves in this area are behind us. I tend to think the next week, I don't really want to speak too. I don't want to say there's not going to be any opportunity, right? Because opportunity always presents itself. When I woke up this morning, I didn't immediately see opportunity. But when I took a look and I saw, this potential high, I was like, okay, well, maybe a little something, this potential high. That looks decent, but where can I play it to? I don't really have too many places to play it to, but maybe I could find, 1.2 risk reward or 1.3 risk reward playing from here to here. Okay, so there's little opportunities, right? But as far as a big move, we're probably chilling for a little bit. Okay, make sure I'm still recording. Everything looks good. Let's go take a look at ES real quick. ES, we're pretty zoomed out here. We have liquidity at the highs. We have liquidity at the lows, at this low as well. Strong range here. Very consolidative. Let's see how long we've been consolidating for. Almost 50 days now of consolidation. Either way, right? Let's see what the market gives us. If it gives us this first, we look for the deviation up here. We play it down to these lows. Many ways to play this, right? Let's talk about them real quick. So this is a little bit of the teaching for you. So we'd be looking at least like a 4-hour or a daily time frame. We'd be looking for a market structure break as we push above. Okay, we sweep liquidity, great. We're starting to look for market structure break. If we're having higher highs, and we're having higher lows, you know what we're looking for. We're eventually looking for a break of the previous high's low, okay? So when we make a new high, we look at the previous high, and we look at the previous low, break down below, okay? That's your market structure break right there, okay? And then what you do is you look for either a retest of the market structure break or a retest of the consolidation that caused the market structure break. So say this line goes into here and then it moves down. Well, you could also potentially get a retest of this that caused the market structure break and that moves you down. Okay, your stop has to account for that. Stop loss has to account for that stuff and go for liquidity ultimately. Okay. 1 second. What else? Clean breakdown of this. I mean, there's the SR flip, right? If you want to try the SR flip, I don't think it's terrible, but it feels trappy to me. It feels like it might be. It feels like it could be trappy. If you get stopped out, if you get stopped out trying to play a short here and it reclaims something like this, you just look for the long off of this level and you play it towards liquidity, something of that nature. Yeah, you got to be careful when ES does this heavy consolidation because it can get nasty. I always talk about how clean it is to trade ES, but when it consolidates, it can get a little nasty. All right, yeah, so liquidity. We talked about some trade scenarios. I'll show you Nvidia. I think there's a good trade coming up on Nvidia, slowly but surely. Prime example of market structure here. High, low, higher high, higher low, higher high. Equal lows maybe, or higher low, can't tell, but nonetheless. Higher high, higher low, higher high, higher low. So just going to keep going? I mean, we'll have to see. But, if you shorted this already, you have to ask yourself why. because we're on a 4-hour time frame, and the most we've seen is equal lows. We have not seen a market structure break here yet. Okay, what we are seeing is something I've taught you guys: the buildup of liquidity. Okay, so looking at high time frame here, you could just see, you could see resistance, little deviation here, flips to support briefly, but it's a deviation. Breaks down below, resistance here, liquidity here, comes up, retests resistance, sweep all this liquidity that's built up. We play it back towards 250s. Okay, 250 is where we play it back towards. So optimally, we get a little rally, a little excitement above 300. We play it back to 250. Okay, that's ETH, that's ES, that's Nvidia. I think those are some good setups. Sorry, you're probably hearing my chair creaking. So Herman Miller Embody. I'm not sure why it creaks so much. I don't know. Maybe it's starting to get a little old. It's a couple years by now. Chair is super comfy, by the way. No sponsor, but hit me up if so. Speaking of sponsors, and before we get all into that, if you appreciate the content, like and retweet on Twitter is always huge. Comments in the YouTube, let me know what you're learning. If you have any questions, all that's great. Shout out to Prime XBT, as always, for sponsoring these videos. You can check my link at the bottom. If you sign up there, deposit there, that's huge for me. Let's keep these educational videos coming for free. Okay, thank you very much, everybody, and have a great week. I'll talk to you soon.